another thing that's breaking right now is the CPI data number that has come out just in September. Consumer prices have risen 5.49% on a year-on-year basis versus an estimate of 5.10%. September headline inflation rate is at 4.49% versus 3.65% in the month of August. To weigh in on these numbers, we are now joined by Indranil Pan, who's the Chief Economist, Yes Bank, and Madan Sabnavis, who's the Chief Economist, Bank of Baroda. Hi, gentlemen. Thank you so much for taking the time out and joining us. I'll come to you first, Indranil. Give us a first cut of the numbers of how you're reading into it. Clearly, these numbers have surpassed even what we were expecting. While it was expected that this time around the inflation is going to come in higher than the 4% RBI mark on the back of the lower base effect and also a higher food inflation, but this number has actually surpassed what we were penciling in. Also, how do you read into this?
Well, I think this was, as you rightly said, was a bit of a surprise for us on the higher side, which is of course not good from the perspective that everybody or most of the market, after the change in stance by the Reserve Bank of India, were reading into that in terms of a December rate cut. We'll have to see how what are the internals in terms of the data, but my hunch is that in terms of reflection from the NHP prices, which we generally take as a lead indicator to project the food inflation, possibly the reflection of the NHP prices is much more in this reading than what we generally have seen on a seasonal basis. So that could be one of the reason. The secondly, what I would also want to watch out for, and I don't really have a calculation yet on that, is how the core CPI has moved. Because if you sort of see RBI's statement or the governor's statement, clearly they were pointing out to the fact that the core has bottomed out and should be relatively on the higher side for the remaining part of the year. Now, with growth holding and with commodity prices relatively on the higher side, whether that is indicating some amount of pass-through to be happening from the WPI side or the producers' prices side to the retail side also needs to be watched out from a core perspective.
Right, I'll come to you, Madan. Clearly, this is an upside surprise that came in as far as the numbers are concerned. This was pretty much largely expected that food prices are likely to remain elevated. Also, the rural demand is picking up. That's another factor that has has contributed to an inching up of the inflation. But tell us, how is the RBI positioned now as far as the rate cuts are concerned in the month of December? While we were expecting a higher inflation number, but these numbers have come up as an upside surprise for everyone.
In fact, if you look at the RBI's forecast for inflation for the third quarter, that is starting from October, November, December, it's supposed to be in the region of 4.8%. So this particular number, which we got of 5.5%, which comes over 5% last year. So it means that it's not that it was the low base effect which has led to 5.5%. Prices have been rising, especially in the food basket. So I think the indication is that the Reserve Bank of India will definitely not take any decision on the repo rate in December, because we will be facing these kind of horrendous numbers of about 5%, I think, for one more month, that is for October, according to our calculations. And therefore, the earliest that we could be thinking of a rate cut would be only in the month of February. Now, this said, I think our calculation here of core inflation is that it's more in the region of 3.4, 3.5%. So there is a case of core inflation also creeping up. And there are manufactured goods. I think the personal care segment is something which has been witnessing increasing inflation. And this is more on account of the higher input prices. So I think inflation is getting slightly generalized. I think that could be a kind of a worry. And there will also be this important decision which the government has to take about the fuel prices. Because right now we're seeing Brent going towards the $80 mark. Now the question is that whether the fuel prices at the retail end are going to be increased or not. Given the fact that we have a couple of these elections also coming on, there was an expectation that either the state or the center would be lowering the taxes. But I think with the prices going up internationally, there could be some pressure not to do so. So that would be an interesting call, given the fact that we are already seeing inflation in the region of about 5%.
Indranil, I'll come to you, and taking a leaf from what Madan just said, that this is not a case of a low base effect from last year, but perhaps the prices are really on the rise, and a couple of factors that are contributing and likely to contribute in the future as well, whether it is the geopolitical tensions or the rise in the crude prices, which is likely to remain elevated given the tension, and also the festive demand. There is also pickup in rural demand. All of these things are auguring well for a rise in inflation. So next month is also likely to remain elevated. When do you see inflation really cooling down to comfortable levels? When do you see that reversal happening?
Well, I think a few factors need to be put into context at this point in time. Now, when RBI had been saying that inflation is likely to be on the lower side, there were certain assumptions in the sense that, yes, the monsoons have panned out well, the distribution has been good enough, reservoir levels have been good. But if I look out of the window now, there are dark clouds already in Mumbai, and the late withdrawal of monsoon, especially with respect to the vegetable crops, standing crops such as onions, also becomes very relevant. So while on one side we say that rains have been good, we also need to factor in what damage a late withdrawal of the southwest monsoon could be doing for certain crops. So that's point number one. The point number two is that if I actually look at the early indicators for the current month, which is October, and which will be getting reflected in the October data that comes out in November, vegetable prices actually are up by around 13.6% on a month-on-month basis already, and edible oil prices are up by around 7.4% already, levels which are higher than in the previous month. So these are some of the factors that we need to factor in, and I think, as Madan also rightly pointed out, the next reading could be also closer to a 5.5% or even higher if these are the relevant numbers that we are looking at. And subsequently, for the next month also, we could be looking at inflation on the higher side. And then the base effect, which is actually also pushing up this inflation, reverses, and then we can see a softening. Now, as the base reverses, if certain commodities, such as I pointed out in terms of the late rain withdrawal, could be a problem, the drop in the inflation may be more muted than what we are expecting at this point in time, which necessarily means that I clearly see some risk of the 4.5% inflation average expectation from the RBI to be breached on the higher side for FY25 itself.
Madan, coming to you, let's talk about the inflation as far as food prices are concerned. That has been a raw nerve. In fact, food inflation has been rather sticky, and I mean, going forward, it's likely to probably remain elevated or probably worsen in the next 1 month. But the food prices have been a pain point for a while now. Do you see a reversal coming in anytime soon, like post 1 month that you're penciling in? Do you see food prices cooling down?
So let's distinguish between the kharif crops and the horticulture crops. I think horticulture crops, like what Indranil was talking about, your onions, potatoes, tomatoes, I think those prices are going to remain elevated because I think we'll have to wait for the news cycle to begin to see downward movement in prices. Because these late rains withdrawal is something which is affecting the onion crop, and we have already seen the prices move up substantially. In terms of kharif crops, I think there is some kind of a solace, depending upon how good the harvest is. Now, based on the areas sown, it looks like that things like pulses as well as cereals, that is rice in particular, would be having a fairly good harvest. There would be growth over last year, in which case there could be a tendency for prices to remain stable. I'm saying stable, not really come down, because we should remember that we have had the MSPs also increase, which means that the benchmark prices in the market have gone up. So therefore, for the kharif crops, we could be expecting some kind of moderation in prices. But in terms of the horticulture crops, and even if I look at things like your dairy products, which are there, eggs, for example, that would continue to be elevated.
Right. All right. Thank you, Indranil. Madan, thank you so much for weighing in on the situation and taking the time out and joining us.
If you like this video, then like, share and subscribe to ET Now.